How a trash-talking crypto founder caused a $40 billion crash. Hi there, please kindly hit the subscribe button and on the notification bell for more information. KWON, a South Korean entrepreneur, hyped the Luna and Terra USD cryptocurrencies. Their failures have devastated some traders, though not the investment firms that cashed out early. KWON, a trash-talking entrepreneur from South Korea, called the cryptocurrency he created in 2018 "my greatest invention." In countless tweets and interviews, he trumpeted the world-changing potential of the currency, Luna, rallying a band of investors and supporters he proudly referred to as lunatics. Mr. KWON's company, Terra Labs, raised more than $200 million from investment firms such as Lightspeed Venture Partners and Galaxy Digital to fund crypto projects built with the currency, even as critics questioned its technological underpinnings. Luna's total value ballooned to more than $40 billion, creating a frenzy of excitement that swept up day traders and startup founders, as well as wealthy investors. Mr. KWON dismissed concerns with a taunt, "I don't debate the poor." But last week, Luna and another currency that Mr. KWON developed, Terra USD, suffered a spectacular collapse. Their meltdowns had a domino effect on the rest of the cryptocurrency market, tanking the price of Bitcoin and accelerating the loss of $300 billion in value across the crypto economy. This week, the price of Luna remained close to zero, while Terra USD continued to slide. The downfall of Luna and Terra USD offers a case study in crypto hype and who is left holding the bag when it all comes crashing down. Mr. KWON's rise was enabled by respected financiers who were willing to back highly speculative financial products. Some of those investors sold their Luna and Terra USD coins early, reaping substantial profits, while retail traders now grapple with devastating losses. Pantera Capital, a hedge fund that invested in Mr. KWON's efforts, made a profit of about 100 times its initial investment after selling roughly 80% of its holdings of Luna over the last year, said Paul Varadatakit, an investor at the firm. Pantera turned $1.7 million into around $170 million. The recent crash was unfortunate, Mr. Varadatakit said. A lot of retail investors have lost money. I'm sure a lot of institutional investors have, too. Mr. KWON did not respond to messages. Most of his other investors declined to comment. Kathleen Brightman, a founder of the crypto platform Tezos, said the rise and fall of Luna and Terra USD were driven by the irresponsible behavior of the institutions backing Mr. KWON. You've seen a bunch of people trying to trade in their reputations to make quick bucks, she said. Now, she said, they're trying to console people who are seeing their life savings slip out from underneath them. There's no defense for that. Mr. KWON, a 30-year-old graduate of Stanford University, founded Terra Labs in 2018 after stints as a software engineer at Microsoft and Apple. He had a partner, Daniel Shin, who later left the company. His company claimed it was creating a modern financial system in which users could conduct complicated transactions without relying on banks or other middlemen. Mr. Shin and Mr. KWON began marketing the Luna currency in 2018. In 2020, Terraform started offering Terra USD, which is known as a stablecoin, a type of cryptocurrency designed to serve as a reliable means of exchange. Stablecoins are typically pegged to a stable asset like the US dollar and are not supposed to fluctuate in value like other cryptocurrencies. Traders often use stablecoins to buy and sell other riskier assets. As Luna caught on, the naysayers grew louder. Charles Cascarilla, a founder of Paxos, a blockchain company that offers a competing stablecoin, cast doubt on Luna's underlying technology in an interview last year. Mr. KWON responded by taunting him on Twitter, "WTF is Paxos?" Kevin Zhou, a hedge fund manager, repeatedly predicted that the two currencies would crash. But venture investment came pouring in anyway to fund projects built on Luna's underlying technology, like services for people to exchange cryptocurrencies or borrow and lend Terra USD. Investors including Arrington Capital and Coinbase Ventures shoveled in more than $200 million between 2018 and 2021, according to PitchBook, which tracks funding. In April, Luna's price rose to a peak of $116 from less than $1 in early 2021, minting a generation of crypto millionaires. Around the same time, some of the venture capital firms that had backed Mr. KWON started to have concerns. HackVC, a venture firm focused on crypto, sold its Luna tokens in December, partly because we felt the market was due for a broader pullback, said Ed Roman, a managing director at the firm. Martin Baumann, a founder of the Hong Kong-based venture firm CMCC Global, said his company sold its holdings in March at about $100 per coin. We had gotten increasing concerns, he said in an email, both from tech side as well as regulatory side. CMCC and HackVC declined to comment on their profits. Even Mr. KWON alluded to the possibility of a crypto collapse, publicly joking that some crypto ventures might ultimately go under. He said he found it entertaining to watch companies crumble. Last week, falling crypto prices and challenging economic trends combined to create a panic in the markets. The price of Luna fell to nearly zero. As critics had predicted, the price of Terra USD crashed in tandem, dropping from its $1 peg to as low as 11 cents this week. In a matter of days, the crypto ecosystem Mr. KWON had built was essentially worthless. Thanks for watching, and please do not forget to click on subscribe button for more updates.